Netflix shares have been climbing in the first few days of 2023. The moves caught Brian Sozzi's attention. He says the momentum could continue. That's where we find the stake today.
Right, we're 10 days into the new year. Netflix shares are rocking, Julie.
It hasn't traded for 10 days.
Well, they're ripping higher. The stock's up about 9% so far in January. That's the point I'm trying to make here. Up 70%. Believe it or not, in the past 6 months, Netflix shares absolutely on fire. So let me decode why I think you're seeing some of these moves in the stock. First, earnings power unlocked from the new ad tier. A lot of optimism on the street on how much revenue, how much in profit potential this company will pull out this year and then moving forward because of this new ad tier. Really interesting note by the JP Morgan team earlier this morning. They're out there raising their estimates in large part because of this new ad tier. Next up, in late December, the new executive compensation structure at Netflix hit. Basically, Reed Hastings is among other executives at the company taking a more shareholder-friendly approach. I believe will not be paid a salary. Essentially, his earnings will be tied more to share-based compensation. Of course, that would theoretically incentivize him more to perform better on the top and bottom lines, whatever that might entail. Next up, buzzy releases, something that this team always talks about, the latest Netflix releases. Glass Onion, Troll, All Quiet on the Western Front, My Name is Vendetta, and of course, Wednesday, all off to a good start, according to JP Morgan this morning in its note. And then also, JP Morgan also highlighting or surfacing some new data out of Apptopia. Netflix download trends improving. We have that chart here. You can actually start to see some of the download trends improving right there below my big fat face. You can see that trend starting to improve incrementally, those downloads for Netflix in large part because of some of those new titles that are getting favorable reviews there. So that is a good thing. Now, Netflix reports earnings on January 19th, a couple days away for that one. One number to watch always with Netflix, but especially this time around, given how far the stock has run, is net additions. The street is looking for around 4.5 to 5 million new net additions for Netflix. Netflix's guidance is for 4.5 million. So the street's expectations are very, very high into this report, raising the bar for what Netflix has to deliver and then also ultimately report on their earnings call. My take is this. On the earnings front, if Netflix does not have that perfect earnings day, which includes strong execution on the financial statements, notably the net additions, but also a strong earnings call, you can see a little bit of a pullback in Netflix shares just based on the strong run we have seen the past 6 months, and Julie, and of course, year to date.
I saw you were watching Harry and Meghan there on that screen on your tape.
I'm hooked. I've watched it actually twice.
Really? You're going to read the book too?
Watch the whole thing
I liked
twice?
it. I'm a little bit of a royal geek. I dig it.
Would you read the book? Are you going to get the book?
No, time for that. I just watched that, and I watched the Anderson Cooper interview.
Excuse me. Yeah. You watched the whole series twice, and you don't have time to read the book?
I don't want to read the book. I read enough financial statements and Bed Bath & Beyond earnings. I don't want to read more stuff. I just want to relax. Julie.
By watching the Harry.
I don't want to read it.
Right. Well, certainly on the titles, they did crush it last quarter, and we'll see if that shows up in some of the numbers that are expected by the street.